What's up, everybody? RaviRamCPA again from RaviRamCPA.
I'm Devin Ramnarain. Hey, guys.
Hey, and today we're going to talk about the Sarbanes-Oxley Act, or colloquially known as SOX. Now, a lot of you guys who watch our videos are public accounting, true blue, born and bred, and we totally get that, and this video is definitely for you guys, but at the same time, we also want to reach out to small and medium-sized business owners who, whether your companies are private or public, and make you understand why SOX is important to you. So let's dive right in. A lot of millennials and people of that age bracket may be somewhat familiar with some of the corporate shenanigans that happened in 2001 around that time.
Enron, the stagnating stock market, all of that. I was a little young, as well as many people in the millennial Gen X time frame of life. We didn't really study that in school because we were very early in grade school, so you may or may not know about it unless you did some reading on your own or as part of your major. But what happened really there?
In a nutshell, a company called Enron doing some cooking of the books, some really bad things as far as hiding the true financial picture of their companies, through special purpose entities that they were not disclosing in their balance sheet and their notes to the financials.
Fun.
So, Arthur Andersen, the former well-known CPA firm that was supposed to be auditing them, was actually in cahoots with them, helping them structure these shenanigans, if you will, and literally shredding documents in the middle of the night. So basically a few bad apples just took down the entire firm, and it was basically just the background that, among other, corporate scandals that happened around that time, that led to President Bush signing the Sarbanes-Oxley Act in 2002. Here we are 16 years later, and it's still alive and well. And so you're the business owner, you hear this, great, what's this got to do with me? It's got everything to do with you. You are literally now, if you're dealing with a public company, even in that capacity, having to be cognizant of the fact that your policies and procedures need to be in place. You need to have documentation around everything you do operationally, and especially if it's impacting your company from a financial standpoint. That's the base for having a robust internal control environment. You want to have your committees in place. You want to make sure you have a SOX steering committee, financial experts who are there to be a resource for the internal, external auditors, other risk areas of your institution, to make sure that the testing of the controls that you have in place are going according to plan, that there's an action plan for any weaknesses and whatnot. You want to make sure your audit committee is consisting of the right amount of experts to, again, steer things in the right way. You want to make sure you have a compliance committee, compensation committee, disclosures committee, again, to make sure that all checks and balances are in place. You want to have a SOX PMO, or project management office, that goes out and documents the process flows for all of the major areas in your company, making sure that those major areas are in line with your policies and procedures, or SOPs, and ensuring that there are controls documented for, or within each process. You want to have a financial reporting area that has a SOX person who's mapping all of these controls within those processes to your general ledger. Each control needs to map to a financial statement line item and to a general ledger account to make sure that you have adequate risk coverage, making sure that all of the controls map to your management financial assertions, valuation, existence, presentation and disclosure, completeness, rights and obligations. All of that has to be done. You also want to make sure too, in the PMO and the financial reporting units, that you're having an adequate number of entity level controls, transaction level controls, IT controls, also known as ITGCs, making sure that everything is, again, like I mentioned, mapped properly, making sure your entity level controls are mapped to your, and again, the accountants watching this know this, the COSO, Committee of Sponsoring Organizations Principles. There are 17 of those in today's world, and there are also 80 some odd points of focus. And again, this is all really, really technical stuff. We get that for you small and medium-sized business owners, but at the same time, there are many firms out there, hint, hint, that are very, very, very well-versed in this and can help you set all of this up. So, again, you're that business owner and you're wondering, excellent, so what happens if I don't do this? Well, we didn't really talk about the audit piece of it. If you're a company that gets audited, by an external auditor, if you have an internal audit function, they're going to test these controls. And they're going to be relying on the testing of those controls to do their audit. And that's going to set the scope for their audit, and that's going to determine whether they look in a drawer of 50 invoices and choose 5 or choose all 50, for testing, things like that. That's a very, very simplified way of looking at it, but that in a nutshell is what you are going to go through. Your internal control environment, the stronger it is, the less substantive testing that the external and internal auditors would need to do to be comfortable with your financials. So again, you're still wondering, hey, what's gonna happen if I don't do this? Well, do you want to talk more about what the ramifications are of non-compliance with SOX for a small or medium-sized company?
Right. If you're trying to go public and you don't have your, SOX controls in order, if you're trying to get insurance for yourself or your employees, your premiums are not going to be here. You know what I mean?
Right.
It's going to cost you a lot more than it would otherwise. If you're trying to go ahead and sell your company, you're going on the market, they're going to look at, your internal controls and see how much of a mess they are. And they're going to be like, no, I'm not babysitting any of that. I don't want to buy it. I'm not buying your firm. Well, you do that a few times and then your business reputation is it hits the dumpster.
The dog and pony show just becomes a dog show, I guess.
Right. Yeah. And if it gets bad enough, you can have legal ramifications from it as well.
Right. Another good thing about SOX compliance is it encourages you to make sure that you have an anti-fraud framework in place at your company, that you have adequate legal counsel in place to literally protect your executives from signing off on financials that are wrong, per se, or internal controls that are not up to par.
You mean the C-suite executives don't review that stuff themselves?
Your C-suite executives are not bookkeepers, and they don't have time to babysit your employees. They're relying on a lot of things to go right in order to sign off on those financials. In a public company, if you're a CFO and CEO and you sign off on financials that don't cut the mustard, you're gonna go to jail very likely. You can joke and laugh about that. It's funny, ha ha ha, don't drop the soap, but that literally...
as funny as that is.
Yeah, that's your fate if you cook the books and you decide to play God or something with your financials. No, it doesn't work that way. You have to comply with the law, especially in this post-Enron, this SOX era that we're in.
Yeah, people don't mess around with that stuff anymore.
No, there's too many investors or too many third-party stakeholders that are relying on accurate financials. Stock prices are tied to it. You have to do things right. You have to do things by the book. I hope we didn't get too technical for you guys today, but if you want to hear more, again, we definitely want to hear from you. So for Devin Ramnarain, I'm RaviRamCPA. So long, and we'll see you next time.
See you guys.
Bye.